know she's here. All right, I call this meeting to order of the Conroe Independent School District Audit Committee. Today is January the 13th, 2021. The time is 7:32. Because a quorum of the board is present, if anyone would like to make a public comment on any of the three action items on the Audit Committee's agenda, which are consider and approve selection of Audit Committee Chair, consider approval of minutes from the September 9th, 2020 Audit Committee meeting, and consider approval of recommendation of the district's 2020 comprehensive annual financial report to be presented to the Board of Trustees at the next regular meeting of the board. You are welcome to do so at this time. All right. Hearing no one, we will go and move on to item 1 on the agenda, which is to consider and approve the selection of an audit committee chair for 2021. Are there any nominations?
I would nominate Mr. Ray Sanders if he was willing and able.
Second that, yeah.
All right, we have a motion. Any other nominees? All right.
Figured I'd do it to you before you.
Robert's Rules of Order does not require a second on nominations, so I will accept that position. All right, all those in favor? And all those opposed? All right, thank you for your confidence. I appreciate that, Mr. Moore and fellow board members. Item 2, consider approval of the minutes of the September 9th, 2020 Audit Committee meeting. Those were included in your board book. Is there a motion to approve those?
Move to approve as presented.
All right, second?
Second.
All right, any discussion? If not, all in favor? All opposed? All right, thank you. Item 3 is receive presentation of the comprehensive annual financial report, including any changes, issues, and general comments related to the annual financial report by Sarah Roberts with Weaver LLP.
All right.
Good morning.
Mr. Rice is going to come up, I think, and make an introduction for us.
All right, thank you, Mr. Rice.
Yes, good morning, Chairman Sanders, members of the Audit Committee, and Dr. Knoll. It is my pleasure to introduce the presentation of the 2019-2020 Comprehensive Annual Financial Report, or CAFR. I'd first like to introduce the finance staff that is here this morning, and they have once again done an outstanding job for us this year. We have Janice Stowers, Karen Garza, Rachel Batella, Cindy Westrup, and Mandy Dacqua. They have done an excellent job for us this year.
Yay, thank you.
We have them coming to this meeting instead of the board meeting just due to the COVID regulations, and so wanted to recognize them this morning. We're very pleased with the results of the audit, and Sarah Roberts, partner with our independent auditors Weaver and Tidwell, is here this morning to present a detailed review of our CAFR. And Sarah, at this time.
Good morning, everybody. My name is Sarah Roberts. As Darren mentioned, I am the district's audit partner with Weaver and Tidwell, and I'm here to talk about our most recent audit. So this was the audit of the fiscal year ended August 31st, 2020. Let's see here. So I'm going to talk first about the scope of our audit results, and then I'll go into an overview of your actual financial statements, kind of from front to back as if you were flipping through the pages. And I'm happy to take any questions at any time, or if you want to wait until the end, either way is fine with me. So first of all, here's an overview of our audit timeline. We have certain milestones and benchmarks, including our dates of field work, both interim and final field work, and also our board presentations. However, we see it more as a continuous cycle. We stay in communication. We remain available for open communication and discussion with any questions, new accounting pronouncements, or anything of that nature throughout the year. So as we wrap up this year, we're looking forward to next year. The type of audit that we perform for the district is called a single audit. And a single audit applies to any governmental entity that expends more than $750,000 in federal awards. Conroe Independent School District this last year expended more than $40 million in federal awards, so you were well over that threshold. A single audit includes two components. That's an audit of the financial statements and an audit of federal awards. The financial statement audit is performed in accordance with the standards established by the AICPA, which are generally accepted auditing standards, also known as GAS, and also generally accepted government auditing standards, also known as GAGAS, or Yellow Book standards. These standards require that we include tests of compliance with contracts, grant agreements, laws, and regulations that would affect the financial statements. The second component is the audit of federal awards. This audit is performed in accordance with the uniform guidance, which is established by the federal government pertaining to grant programs. We issue 3 reports at the conclusion of our audit. The first 2 pertain to the financial statement audit, and the third pertains to federal awards. The first is our report on the financial statements, where we express our opinion on the presentation of the financial statements. Second is our Yellow Book report on internal control and compliance as it relates to the financial statements. And third is our uniform guidance report, where we provide our opinion on compliance for federal awards and describe the scope and results of our testing. Okay, so with that, I'll go into our results. The first segment on the financial statements, we issued an unmodified report on the financial statements, which is a clean opinion and is the highest level of assurance that we can provide that the financial statements are free from material misstatement. In our second report, which is a Yellow Book report, we had no reportable findings. That means no material weaknesses or significant deficiencies in internal controls over financial reporting, and no other matters, including non-compliance, that's material to the financial statements. So clean report there as well. The second segment, which is federal awards, in our uniform guidance report, we also had no reportable findings. We also issued a clean opinion, unmodified opinion on compliance pertaining to federal awards, and no other internal control findings that relate to federal awards. Our major programs this year for purposes of the single audit were Title I and the ESSER program. The ESSER program is a new program this year. ESSER stands for Elementary and Secondary School Emergency Relief. This was a CARES Act program. New this year, we don't expect to see it recur. We hope we don't see this recur year over year. The total federal expenditures of these 2 programs combined were about $13.4 million, which represents about 33% of the total federal expenditures. Other matters that we would be required to communicate under our professional standards, if they applied to the district, there were no material misstatements that we identified as a result of our audit procedures. No transactions during the year for which there's a lack of authoritative guidance or consensus. No difficulties or disagreements arose during the course of our audit. Of course, just like everything else during the period, there were challenges presented by COVID-19, but nothing specific to this audit. Everything went smoothly. No issues with adjusting to a more remote environment, and no impairments to our independence. Okay, so with that, I'll go into an overview of the financial statements, but first I thought I would pause and see if there's any questions about our audit. No? Okay. So as I mentioned, I'm going to go over and touch on the high points kind of as if you were moving from front to back in the CAFR. The first statement is the Statement of Net Position, which is a government-wide balance sheet. And I've included here a screenshot of what that looks like, as well as on the left, a more high-level aggregated view compared to this year compared to last year. Overall, the increase in net position was $12 million. And if you look at the components of that increase, here are a few that stand out. There was an increase in cash and investments of $93 million, and there are several factors that contributed to that increase. Most notably, the issuance of bonds, increase in property tax revenues and state funding, and also just some basic timing issues for payment and receipt. The increase in OPEB and pension. OPEB stands for Other Post-Employment Benefits. in the accounting world, we say OPEB all the time and realize that's not probably a real English term. To us it is. The net increase there was 30 million. And here's a comparison year over year. What you see here for Conroe ISD as of 8/31/20 is a total negative unrestricted net position and total negative net position, which indicates a deficit. But if you exclude those OPEB and pension balances, you would actually see significantly different numbers. Positive unrestricted net position, positive total net position.
And Ms. Roberts,
Yes.
would it be fair to say that most school districts are going to have financial statements similar because of the
Yes.
OPEB? And again, that number is not one that we get to calculate, it's basically given to us.
Yes, that's a fair statement. And that's why when I'm looking at financial statements, especially comparative, I tend to exclude those balances and show a comparison with and without those balances. Up until 3 years ago, governmental entities were not required to even show these OPEB balances on the financial statements. There was a new accounting pronouncement that came out that required recognition of these liabilities. And the thing for Texas school districts or school districts throughout the country is what these balances represent is an allocated proportionate share of the liability of the pension system as a whole. So this is not just Conroe ISD's liability that you're going to have to pay over the next 10 years. Your responsibility is to continue to contribute the required contractual rates of your employees' payroll into the pension system, in the OPEB system, but these liabilities don't reflect an actual liability balance that you're going to have to liquidate with your resources.
Sarah, if I may.
Yes.
I would just like to point out, we just recently went through our bond process, and as through that review process and getting our rating, these statements were never even brought up.
Right.
They don't even look at these statements. They look at the fund financial statements, and that's what all the rating agencies go by.
Thank
So I just
you.
wanted to.
Thank you for that, Mr. Rice.
Could you give me an example of what would be in an OPEB? Like what is that?
Yes, TRS Care. So Teachers Retirement System is the pension system, TRS, and then TRS Care is the OPEB system. So that's the retirement the healthcare benefits for retirees.
Okay, so that's not part of the pension. The pension is more of the investment, but the OPEB includes retirement health care benefits.
Yes,
Is that probably the biggest piece of that?
that's
Yes.
that's really the only piece of that.
Yeah. Okay.
The reason that number, what's different about school districts if you compare to other governmental entities, cities, local governments like that, is that typically the pension liability is much larger than the OPEB liability. But in this case, the issue is that the pension system is much better funded than the OPEB system. So the pension liability gross is much larger, but the assets that are accumulated in a trust to pay for that liability are also much larger. So the funded portion of the OPEB liability, I think, is something like 1% or less compared to the pension, which is more than 50%.
Sure. Okay.
So, but to go back to your question, almost every school district in Texas shows a negative unrestricted net position, almost every school district,
Because of the OPEB.
because of the OPEB. Okay. So your increase in net position, as it's shown in your financial statements, is 12 million. If we were to exclude the OPEB and pension, it would have been 42 million. The next statement is a statement of activities, and this is the income statement of the district as a whole. Again, I'm showing a screenshot here of that statement as well as some aggregated summarized balances. If we were to exclude the pension and the OPEB, you would see revised changes in net position year over year, an increase of $13 million. Due to a few factors here. Most significantly, property taxes increased by $11 million, due primarily to, or due exclusively to the increase in appraised value, increase in state revenue of $38 million, representing the foundation school program, decrease in charges for services, of $4 million, and that's attributable to a decrease in lunchroom revenues related to the COVID pandemic, increase in payroll expenses of $35 million, which represents about a 7.5% increase, and then other factors all aggregating to about a $13 million increase from the previous year. Moving on to the fund financial statements, as Darren mentioned, this is really the focus. Generally, general fund balance sheet, the total fund balance, $163.9 million, the majority of which is unassigned, which means it's available for expenditure. 93.7% is the ratio of unassigned fund balance to total fund balance. Compared to the previous year, that same ratio was 96.1%, so we're remaining pretty consistent there. The general fund financial statements, the biggest difference here between these and the previous financial statements I discussed are, one, this focuses on the general fund only. So this excludes the capital projects, debt service funds, and also excludes the long-term items. So the OPEB and pension, as well as capital assets and long-term debt, are not reflected on these statements. The focus here is current financial resources. Moving on to the statement of revenues, expenditures, and changes in fund balance of the general fund, which is the income statement. Total expenditures of $529.9 million compared to last year, $495.5 million. The ratio of unassigned fund balance to expenditures is 29% for fiscal year 2020, compared to that same ratio last year, which was 27.2%. So consistent there as well. Those ratios represent for 2020 about 3.5 months of expenditures, compared to 2019, which was 3.25% of expenditures. So again, very consistent. After the fund financial statements, you'll see the notes to financial statements. I've listed here some of the more significant disclosures. All of these disclosures are consistent with last year. There were no new accounting pronouncements effective in 2020. And to revisit the pension and OPEB again one more time, the note disclosures show a sensitivity analysis of what would happen if the actuarial valuations on which these balances are based were adjusted 1% either way, the discount rate and the healthcare trend cost rate. And you can see that that minor change in the valuation model would result in a difference of tens of millions of dollars either way. There are other significant accounting estimates, none as big as the pension and the OPEB, including IBNR liabilities, state funding, and the allowance for uncollectible property taxes. These estimates are all based on third-party information such as TRS or actuaries or historical experience. After the notes to financial statements, the next section is the required supplementary information. The first schedule here is a budget to actual general fund. Expenditures here were nearly $28 million under budget, resulting in a net change in fund balance that was about $20 million over budget. Compared to last year, you can see that the revenues are much closer to budget. Expenditures are a little bit more under budget, resulting in a smaller overall variance compared to the budget compared to last year.
Question.
Mm-hmm.
Can we relate, Mr. Rice, kind of what those added expenditures were primarily for?
On the current year, the added expenditures are going to be primarily payroll, with the raise that we provided our employees and then additional employees that we have.
Okay.
The new school.
And opening the new junior high.
Okay. Thank you.
This is showing that the expenditures came in under budget by about 5% in total. There's several factors here. Again, I would point back to the COVID pandemic for some of them at least, and also the ESSER fund I mentioned is a new federal program for 2020. What happened there was essentially a reclassification of expenditures of about $6 million out of the general fund into that grant program separate fund. Also, there was a decrease in maintenance, such as electricity, utilities.
Utilities was a huge decrease for us this year since the building
reading if it passes.
Yeah. So needless to say, the pandemic had a pervasive effect. The last few sections of the CAFR are the other required supplementary information. There's more information presented in supplemental schedules about the pension and the OPEB, followed by combining and individual non-major fund statements and schedules, and then lastly, the statistical section, which presents trend information generally for a period of the last 10 years. And last topic that I wanted to address today is a new accounting standard which will be effective next year. This is GASB 84, which deals with fiduciary activities. This may sound familiar because it was initially supposed to be effective for 2020, but due to the COVID pandemic, the GASB pushed back the effective date of basically all upcoming standards by a year in most cases. So this will now be effective next year, or the year that we're in now, 2021. And so fiduciary activities currently are accounted for in two types of funds. Those are agency funds and trust funds. Conroe ISD uses agency funds for its student activity funds, but does not have any trust funds. So under GASB 84, there's now a better defined criteria for accounting for fiduciary, identifying fiduciary activities. Previously, there was some diversity in practice. Agency funds are now going to be called custodial funds, so you'll see that change in the financial statements. And there will be some changes in the required financial presentation. Trust funds, there's some changes there. Again, that will not impact the district because you don't have trust funds. So here's what the current fiduciary fund financial statements look like for agency funds. The changes will be first on that statement on the left, which is the balance sheet. Currently, you'll see that assets equal liabilities. Under GASB 84, there's going to be a more traditional presentation where you're going to have assets and liabilities and net position, which is the equity. And on the right, currently there's a statement of changes in fiduciary assets. That's going to look under GASB 84 more like an income statement with revenues and expenses and change in net position. So no change really in bottom line numbers, just change in presentation. So overall, not a real big effect on the financial statements. There will be some challenges on implementation, capturing information, and all of that. But I think that the district is well prepared and we'll have continuing discussions leading up to the implementation. So that's all I have this morning. I'm happy to take any questions.
You said this new GASB rule is just a change in presentation?
Basically, yes. Yes. Limited to the fiduciary activities.
All right, if there are no questions, other questions? All right. We need a motion to consider approval of the recommendation for the CAFR that will be presented to the board on January the 19th.
Motion.
All right, we have a motion from Ms. Chase, Mr. Hubert, thank you. Any other comments, questions? Not, all in favor? All right, motion carries unanimously, thank you. Thank you, Ms. Roberts. We appreciate you coming this morning and presenting to us. Item number 5 is review of our internal audit work plan and schedule of work completed to date.
Okay.
Chairman Sanders, members of the Audit Committee, Dr. Knoll, it's a pleasure to be here this morning to go over what internal audit's been up to for the last few months, and we've been busy. So get right into it. I want to cover the last audit that we did for the 1920 plan, which was band instrument inventory. And as you can see, we found some issues. Lots of missing instruments, instruments not on the terms inventory, and the documentation that's supposed to be used to check out instruments and track them were not being used as well. We, just to give you an idea of the scope, it was all the high schools and all the junior highs. So we went out to each one, had them lay them out, and did an inventory of every single one. Dr. Horton and his people were fantastic. They were so cooperative and helpful, so I really appreciate that very much. So we've included the follow-up here of what actions have been taken, because obviously there were some issues. And if you all have questions and want some more details, then Dr. Horton can answer those for you. But as you can see, they've established reporting dates. They are going to do a yearly inventory themselves and submit it to Dr. Horton. They are going to get standardized written standards. They're going to have procedures of how instruments are supposed to be checked out. And so everything we found, they have followed up on. So do y'all have any questions on?
I'm just curious what percentage of that 153 missing instruments, what percentage of our total inventory does that represent?
Brian, do you have the spreadsheet still of the total number? I think it was over 4,000 instruments.
Yeah, it was over.
4,700 something
Okay.
instruments. So a significant statistically percentage.
Mhm.
Certainly.
The question I had, sorry, did you have a question, Peter?
I did. I can
Go ahead. No, go ahead, please.
Well, my question was, over what period of time?
May I?
would the-
Yes, yeah. Yeah, if you
Sure.
come to, yeah, let them come up so that
Thank you so
the
much.
record.
Good morning, everyone, and thank you for the opportunity to talk to you. Brian and I began this conversation about instrument audit. Actually, I started with his predecessor, and so Brian and I have continued this conversation. It has been 10 years since we've done a high school instrument inventory, and 3 of our 6 head band directors have come on in that period of time. It has been never since we did a junior high instrument inventory for band. My suggestion to Brian was that we also, in our next phase, do a 5th and 6th grade band instrument inventory, as our practice has been when we've purchased instruments for 7 through 12. The older instruments are sent to the younger kids as beginners, so that we're not buying brand new instruments for beginners. The other part of it is there are so many more band instruments than there are orchestra instruments, but we also know that we as a district provide many instruments for 5th through 12th grade strings players as well. So that would be in the next phase of our audit plan, to be able to look at that. But what we anticipate is the numerical value of those instruments to be far less than the total numerical value of our band instruments, whereas a marimba can cost $15,000. There are very few of our string instruments that approach any of that singular value. So, but I think there were some other questions. I don't want to get ahead of myself.
I guess just for clarity, so over a 10-year time period, is that what we're?
That is what we believe, is that we're looking at the high school level, Mr. Hubert, that we're looking at a 10-year time period that the instruments have not been accurately accounted for. And when I mentioned 3 of the 6 head band director changes, because I think that's part of the education and training process as well, that does not include their assistants or opening new schools or bringing in new staff. It's far more significant at the junior high, where our turnover is higher. So we have a training issue that goes with that as well.
Mr. Beaver, just to be clear, it was 10 years ago that we performed an actual audit.
Yes.
The procedures were in place for them to use the charms inventory. It was
Yes.
just- there hasn't been an audit in 10 years.
Yes, and thank you for that clarification, Mr. Rice, because that also has been a source of constant reminder and improvement. I think one of the things about this plan going forward that we have is we have some very clearly established procedures that are also vetted by our assistant superintendents and principals, so that there's an accountability chain outside of just internal audit or just fine arts.
I see one of the actions is to establish inventory reporting dates.
Yes.
Do you have any indication of how frequent they'll be?
Oh, there will be an annual report, and thank you for that question, Ms. Chase. It will be an annual report with timelines, because there's also a repair cycle that goes with that as well. So it would have those components addressed in it to not only account for what we have, but what also needs to be repaired and/or replaced.
And the part of the significance, or one of the significant changes that is being made is bringing the principal more engaged in the process, because they have not been. As Dr. Horton mentioned, the accountability has kind of gone just through fine arts, which the principal is in charge of the campus and needs to be in touch with everything that goes on. So now they will have to sign off on this report annually. And additionally, one of the ways that we replenish band items on a high school level is through what we call a critical needs purchase every year. So Dr. Horton, along with Darren, go through and campuses identify instruments that may be worn out, or they've grown in a program and they need additional instruments, and so they present what's needed, and we purchase those items to refill annually. You won't be considered for critical needs purchases anymore unless you have turned in your inventory annually. So we've also added that in as a incentive to make sure that everything is done timely and appropriately.
The one other item to expound on that just a hair is that with Mr. Rice and the purchasing department, we've also established standards for our instruments that we purchase, which had heretofore not been done. So we know what we're purchasing, and of course, it's kind of the get what you pay for idea, that the longevity of an instrument is often correlated to the initial cost of the instrument. But more than that, that we're being very diligent about the way that we can actually report what we have. And so it's a reflexive process between both the purchasing and the inventory process, if that makes sense.
Okay. What needs to be done about the missing instruments? Like, do
So
you need them?
there are a couple of action items that we're doing. First of all, we brought in, as a part of training, that lower pink bar there, our 5th and 6th grade campuses to be able to update and accurately record their inventory so that we can see if any of those instruments that are missing are at the 5th and 6th grade. That's one of the items. The other one is we actually have put the directors on notice that these are things that must be found. If they have been stolen, there's a police report format that must be taken care of, and that actually addresses, I believe, 12 of the large.
The big items.
Big items, like there were approximately $60,000 to $80,000 of tuba sousaphones that were stolen
I see.
from a campus a couple of years ago. So that is,
They've never been taken off the
and they had never been taken off the inventory. So they still look like a liability to us, although we haven't been in possession of them for a couple of years.
Is there any indication that you found that there is more suspicion for stolen, or is this really just a case of a long time has gone by and people misplace things and?
It's 10 years of no audits,
Uh-huh.
and that's it. I mean, none of the people I talked to, nothing I came across would indicate that there's any stealing, within the campuses and facilities.
I think it's been a lack of control too of well-intentioned behavior, where one campus is short an instrument, and so they'll send it from this school to that school, but there's never been an accounting of that, and so then it just gets lost. So that we just need better control and documentation.
Brian, my
That is-
question, I'm sorry.
No, please, I was just going to say, and that is one of our end game objectives, is that we have a central inventory from which we can accurately say what we have and don't have. Next step of that would be to provide evaluation of those, because there is an industry standard depreciation schedule that we can use as well.
And my question was kind of twofold. One is, do you feel like the establishment of internal controls is going to be sufficient to take care of this and resolve this issue? And then the second part is there a follow-up audit, even to some minor degree, that will be presented back to the audit committee to kind of prove up those internal controls?
Yes. So the answer to the first question is yes. I believe that what Dr. Horton has instituted will take care of the issues. And yes, an audit like this, we will definitely follow up on.
Okay.
We'll go out and we'll just do a random sampling at some of the high schools and junior highs just to make sure. But, you know, we like to give them 6 months to.
Sure.
To be able to institute all the changes.
The other, and that brings up another question, I'm sorry, and this is unrelated to Dr. Horton, but do we have other assets that maybe we need to have some sort of an inventory performed on to such a degree? And this is probably a Mr. Rice question.
Yeah, you know, we've looked at a lot in the past, our computer inventory. They've done a very good job of the computer inventory. We felt that band instruments that at this time was the most important piece. Now, of course, we do have inventories like with our maintenance department, custodial
Right.
of supplies like that we perform an annual inventory. Ms. Westrup actually heads that up from our office and goes out and prepares the inventories with those departments.
Okay.
Band instruments was the low-hanging fruit
Sure.
that was out there. Technology would be the next piece, and we're working with technology right now because, as y'all are aware, with COVID, we distributed thousands of Chromebooks, thousands of hotspots to all of our students, and so we're making sure that those inventories with those students, so we know where those devices are.
Okay.
So that would be the area.
Yeah, the technology piece, just to speak to that, I mean, that's certainly a large area of concern. And so we, as we distributed quickly last year, many of our campuses utilized, we have a program called TipWeb, which is how we manage those devices. Many of the campuses were able to input during that time all those devices, but some didn't. Some used an external system that worked for them, a spreadsheet or whatever. We've actually given a deadline of this Friday for all campuses to go back and make sure that TipWeb is completely updated with all their technology resources so that we get back into the right system. So we had an assistant principal meeting yesterday, and they were reminded yesterday that Friday is the deadline to get caught up.
I might just make a suggestion that and I'm not saying it needs to be done immediately, but at some point, maybe this audit committee could be presented a summary. I don't need details, just a summary, large level executive summary, just of inventories that are done or completed, maybe those that are incomplete, because I think it's appropriate if there's going to be some sort of carrot, such as, you don't get on the critical items list if you don't complete your inventory, just so we know what inventories have been and have not been completed, just so we as a board can be aware to try and help manage the financials of the district. Just a suggestion. Maybe that could be a part of an annual report that's done after the end of the fiscal year, proportionately, because we know it can't be September. But at some point, there's a lot of things going on then, but at some point during the audit year, some sort of a presentation, just a summary of, inventories that have been completed.
So, we kicked off the transportation audit yesterday, and parts inventory will be part of that audit.
Okay.
And I just want to bring up one of the things that you have to remember that for 5 years, all internal audit did was activity fund audits, and this is what happens.
Right. No, we appreciate that. And
So, part of what I'm trying to do with internal audit now is find these issues and let's get some controls around them and work to improve them.
And I believe that's what it's all about. It's not about calling someone out for not doing what they should have done. It's more about having internal controls present so that will be identified before an audit is done. Yeah. Thank you. Dr. Horton, thank you.
Thank you. Any?
I have one last
Yes,
question.
please.
The two bits that you mentioned that everyone knew were stolen but just weren't taken off
Yes.
the asset list, what was the approximate value of those? Of the like 450?
Replacement value, they're probably in the $72,000 range aggregate. $6,000 to $7,000, $8,000 a piece, just depending on the actual replacement value now. So the amount that you see in there,
Yeah, that
roughly.
replacement value is just based on if we had to go out and buy them right now.
Right.
Sure.
So whereas a flute might be $500, these particular instruments were between $6,000 and $8,000 each.
Yeah. I was just trying to get a feel for like how much could be solved by implementing this inventory and extra controls, and how
Yes.
much were just.
Yeah, that single incident was a rarity. I mean, that, you know,
Yeah, yeah.
it's not uncommon for somebody to lose a flute or, you know,
Sure.
but this was a crime that was committed where, you know, $70,000 worth of instruments were stolen. We knew it happened. It was a police incident. That is a rarity, but that happened.
So in answer to what I think is your question is, we absolutely are in the training and education mode that also has the ongoing accountability piece of knowing what we have, what we don't have, what we've loaned, what we've given for repair, and what has been lost, damaged, or stolen.
And do you think that these additional controls and inventory and all of that, do you see them as burdensome to?
No, I don't, for really a couple of specific reasons. One, it's actually in the stipend description of our band directors to have an inventory piece. And there are a million other things in their stipend description, but it's a very practical matter, secondly, and that is if you know that you are going to be short instruments or you don't have instruments, that when a teacher can't put a horn in a kid's hand that needs it, or you know, you don't want to cart a tuba back and forth every day on the bus, or you can't. I mean, that is a very practical sort of boots on the ground explanation. But the other part is I think that everyone realizes the gravity, meaning the instrumental music educators realize the gravity of this situation, having seen the numbers, because we shared the numbers with the staff as we did this training on January 4th. And individually at the campus level, we provided them a post-audit report of what they were missing and what they had found and all of those kind of things. So I believe that they understand the gravity of the situation, and they don't see it as an additional responsibility, but as an embedded responsibility.
And I think most of them had some type of internal system. They just weren't using the district system. So it might be a little more work to get out of whatever system they've built in their own little Excel world and get it into the district system, but they're doing some type of tracking of instruments already. So I don't think it's here's a whole nother thing to do. It's just do it the right way training piece for them.
I think we showed them, we did the inventories, that you can do an entire high school in an hour and a half. We didn't count every drumstick. That's $1 a piece, or, you know, the really low ticket items. We didn't count those. We're counting the instruments, you know. And so I think when you look at it that way, you just lay them out. The covers have numbers on them. You check that number against the charms and you move on. And it's not that burdensome.
The terms inventory is very user-friendly.
Yes.
It's not a difficult
No.
software.
We got it down to an art by the end of the.
I bet you did.
Thank you.
And it does, just one other question that may come about eventually. There is not a district number. It's not like Conroe ISD number 3500. We use the actual serial number of every instrument so that it's a granular attachment as opposed to a secondary system. So in charms, they list Selmer saxophone number 35817 that has the actual manufacturer number on it. So it is specific to an instrument as opposed to a description or a characterization or a secondary system.
Makes sense.
Okay.
Thank you. Other questions?
Thank you all.
So we'll move on to the 2021 audit plan. So the activity funds, we've completed 3 of them. We're currently working on Woodlands College Park. We have completed the payroll leave audit. The findings were You know, I come from the corporate world, so looking at what HR does versus what payroll does here, it's not the same as in the corporate world. And so what we found was a lot of the leave activities are done in payroll, where back in the corporate world, they would be done in HR. And we have people coming up to talk to payroll about their leave issues, and that's not where it belongs. The other issue we found is just the bus driver, their change in standard hours. It's very labor intensive within payroll to do that. So they do it 3 times per year, the beginning of the school year, I think the 1st of November, and then in February. And what we found was that 93% of these changes are done in the first two, the September and November. There's no reason to do it the 3rd time. And it's just extra work for payroll. And just the number, the 336 changes, where 90% of them are an hour or less. So maybe we need to think more about, we're not really going to change it unless it's over an hour. But again, they're going to, the people in charge of these operations are going to talk and try to come up with the best system possible to try to reduce the number of those changes that are needed.
Tell me what that means. I'm not sure. I'm not following
so-
you. Number of changes per year.
Sure.
Yeah, that'd be good.
In our transportation department, you know, they're 10-month employees and we pay them over 12 months. So we have to come up with a way to calculate their payroll over 12 months as they clock in every day.
Okay.
So we have come up with a process, and we call it their standard hours. Their standard route, let's say for a bus driver, is 6 hours. So when we establish that standard hour rate, payroll then takes that standard hours, calculates what that's going to be, and spreads it out over 12 months instead of 10 months that they work. So they're actually getting paid during the summer when they don't work. So we're helping, you know, that's a benefit to our employee. What we've run into over the years is our bus drivers realize that if my route is 6.5 hours, the way that our process works is that extra half hour, you get paid during that pay cycle instead of it being spread out. But then they realize that, hey, but if I take a day off, I only get paid for 6 hours on that day off, not 6.5. I want my half hour on my day off. So they're getting paid their time. It's just that they realize these little intricacies in there. So they want to change their standard hour. So to change your standard hour, they have to go through a process within the transportation department, you know, to make sure that it's approved. And then they send that half-hour change to our payroll department. But for payroll to calculate, let's say it's in November when that calculation comes in, they have to go back and recalculate, redistribute that employee's pay for the whole year, recalculate what it's going to be over that 12 months. We've had employees that have had up to 6 changes in a year. And it's hours to sit there, because it's a manual process. There is no payroll system on the planet that I know of that can handle these calculations without doing massive custom. So it is a manual Excel spreadsheet that we have employees that have to recalculate these, you know, every time that they come in. The only time that it makes sense is if an employee's standard hours decreases, because then that could be punitive on a paycheck month to month. But so what we've worked with transportation is we have moved for next year to only doing the changes if it's greater than, it's 1 hour or greater. That will solve a lot of the issues that we're having as far as volume in our payroll department. And so with that change, I think that'll take care of a large percentage of it. I hope that explains the process. I know it's confusing. If you saw the calculation, you know, it would.
That makes sense to me. My follow-up is, we have to pay them 12 months. We can't do it.
They have the election. Years ago, we did the election because, you know, this was an issue because they were wanting to change it 5-10 minutes. You know, every time somebody added a new traffic light, they wanted to make a change to their standard hours. And so we did provide them the option. We do have employees that are paid on 10 months. We thought we'd get a large, I think there's about 15 that took that option out of our 500 bus drivers. So, you know, it is, you know, they just don't use that option right now. So we could mandate 10 months. Cy-Fair does 10 months. Some of your larger districts are just 10 months, but then we've noticed the districts around us saw that we were paying over 12 months, so they've all changed to 12 months. Now, they have a lot more stringent rules. They don't allow any changes. Once your standard hours are set, you don't get changes. We still provide the changes. So it's just, you know, the districts right around us who we compete with for bus drivers have went to the 12-month pay. And so for us to go to 10, we'd probably have bus drivers that would go to Montgomery or Willis or something like that.
So moving forward, you're saying they get 2 times a year to make that change, and it's got to be at least an hour?
At least an hour change.
At least an hour
Mhm.
change.
So I'm not following, so I'm sure it's my fault. But my question is, if we pay an average driver X per hour that they work, they're going to get typically paid over the 10 months that they work, right? I mean, they're earning pays over 10 months. They're going to be paid out over 12, but their earning is over 10 months.
Yes, sir.
Is there not a way to divide that by 12? That pay rate per hour, divide it?
Well, you can't, what we
I
can.
mean, $10 an hour for
Well, you
10
can't change their
months,
pay
I
rate.
can
but what-
calculate that pretty
yeah,
easy.
we can't change their pay rate. What we're changing is their hourly rate. We're not allowed to change their pay rate. We have to change.
Correct.
I mean,
Correct. The
we're
pay
having to
rate,
change
their
the
hourly
number
rate.
of
That's
hours.
exactly-
Yeah, we're changing
The
the
number of
hours, not their pay rate. So we're changing the number of hours they work to calculate that over 12, you know, to spread that out, because we can't change the rate.
Because really
of
what
pay.
they're doing is they're earning 10 months because they work 10 months, but they're getting paid over 12 months.
Yes, sir.
So
that is correct.
they're actually, their
We're holding
payroll
their money
is
for
less.
them.
Right.
We're holding
Payroll
their
is
money
less.
for them.
Correct,
Yes, sir.
correct.
Is what it is. We end up holding their money.
Which is what we
for
do
them.
for teachers as well. I mean.
Sure.
Yeah, same thing. Yeah,
Exactly.
same thing for
Same
teachers.
Exactly.
Yeah,
Right.
yeah, same process.
Teachers are a little easier because they're kind of an exempt.
Correct, yeah, their hours don't change, their
Right.
daily rate doesn't
And-
change.
right,
It's-
right.
And
it's a fixed
Mr.
number.
Sanders, I really think the simple change to 1 hour or greater
Okay.
is, we should not have this conversation. I think
Okay. My
this
concern
will-
is just manual processes.
Oh, it is
are always
very manual.
open
Over
to
half
flaws.
were a half hour.
Yeah.
I got you.
So-
Okay.
So,
It sounded to me that the bigger issue, or I think the issue with the bus drivers was if their standard hour is 6, like you said, when they take a day off, even though they're working 6.5, when they take a day off, they only get paid on 6. Not that 6.5, and that's where they're.
Yeah.
and
wanting
that
to
that was
come and
one of
say,
their,
"I
that
wanna
was,
get
that was one of the, yes, sir.
my standard hours.
And so,
over than that."
we really think that sticking to this hard and fast will eliminate.
And
And
again,
we'll
as
be able
long
to
as the employees feel like it's fair too.
Yes, sir. Yes, sir.
Yeah, yeah, okay. All right. Other questions?
Okay. So as I mentioned earlier, we kicked off the transportation meeting yesterday, had a great Zoom call with Sam and his team. So you can see the areas we're going to be looking at, which is bus routing efficiency, inventory controls, management of fuel costs, and general operations. And just to let you know, one of the things that internal audit's trying to do to save money for the district is, instead of hiring another auditor, we're outsourcing, co-sourcing with Weaver where we need. And so on the transportation audit, we have a Weaver senior that's helping us with this, because this is a big audit. And so, like I said, we had the kickoff meeting. We're going to go out to each of the depots. We're also going to look at security, and we'll do a parts inventory, and we'll report back on that.
What kind of scope is in the bus routing efficiency?
We are making sure that they use a program called Compass to route the buses. What we're going to do is be looking at how they use that, if they're using it properly. Are they actually choosing the bus routes that are the most efficient? And there's a ton of data to download and look at and analyze.
On that same question, the software Compass, how often is it updated with new roads and stoplights and subdivisions and stuff like that?
I don't know the answer to that, and that's one of the things as we go into the audit that we'll find out. I just got access to it a couple days ago.
Very good.
Other questions?
Any other questions? The other audits that we have after transportation is child nutrition. And then we'll do the Flex 20 construction closeout. And again, activity funds. And that's it. So any questions?
All right, thank you.
Thank you.
Mr. Sanders, if I could, I'd just say, I think in my, I don't know, 7, 8 years of being in this building, however long I've been in this building, I think this has been the most productive audit committee meeting that I've been a part of as far as truly making changes that can make significant differences for our district. And I want to say thank you to Mr. Sanders. As we went through the process of bringing Brian aboard, the audit committee under Mr. Sanders' direction really helped us change this focus from purely activity funds, which is what we had done for a long time. And we would find, we didn't pay sales tax on a T-shirt over and over again, but which we need to get better at. But these are significant changes. When you talking about payroll and transportation and instrument, those are large areas. So thank you for your guidance, Brian. Thank you for the job you're doing. I think it's
Absolutely.
We are going to get better because of this shift of focus. So thank you for that.
Absolutely. I was just thinking the same thing, thinking we've been here an hour. Normally it's a short meeting, but it's been very productive as well. All right. Other comments? No? Okay. Item 6 is to confirm our next scheduled meeting, which will be on Wednesday, March the 10th. Now, that's the Wednesday before spring break, correct?
It is.
Okay.
Oh, we'll bring a cake or something. So we'll celebrate.
Your birthday, huh?
All
Okay. Is 7:30 a.m. okay for our committee members? All right. Then we will set that date, 7:30 a.m. on March the 10th. Any other business before our committee today? If not, we are adjourned. Thank you very much for your attendance.